Thank you for coming. Appreciate it. My name is Moe Agostino, Chief Commodity Strategist with Farms.com Risk Management. We're going to do a quick presentation today. I'm going to spend about an hour with you, tell you about markets, and hopefully we can go higher. We'll give you some insight. By the way, I'm the last optimist on planet Earth when it comes to commodities. Everybody else is thrown in the towel except me. If you go to trade shows, all my other advisors and experts that I compete with, they're just bearish as can be. And then if you talk to a farmer, the farmer says, I don't think there's ever going to be another rally ever again, Mo. Come on, it can't be that bad, right? So we're going to try to provide that insight for you. So along the way, please don't be afraid to ask me a question. You can leave it till the end. We have a mic here, a second mic, so if you want to answer that question, provide a question, feel free to do that. We work with farmers across North America to help them do a better job of marketing. It's been a tough year, hasn't it? How many guys are still bearish, think prices are going lower? Nobody knows? Sitting on the fence. How many are bullish? You think prices go back up? Now look, since 2019, I've been a store and ignore guy, okay? And it worked well. 20, 21, 20, we made a lot of money together. Then came 23, and all of a sudden, it wasn't so good. But I thought we had a drought last year. What happened to the yield? Better than expected? Are you kidding me? What, is USD lying to us? Well, there's a lot of conspiracy theories going around. It's food inflation, it's politics, it's this, that, the other thing. Look, it's the number we trade, unfortunately. I have a lot of farmers in the United States say, Mo, in this county, USDA says this, and I guarantee it's not that. It's 20, 30, 40 lower. I run the county. I do a lot of custom work. I'm a majority of that county. So it is what it is. I'll get into some of that as to why you got better than expected yields in my presentation. In front of you, I first of all want to start off with, before I go into that, see my title? Whoops. New lower US-led inflationary commodity supercycle. Say that 5 times fast. So in my Chatham presentation, which was at the end of January, something's changed since then. And it was when I designed this title, I thought the US Fed was going to start to lower rates in March. At the London Farm Show, guess what? Not going to happen. This morning he even said before his meeting, we're not going to lower rates anytime soon. And now the market thinks we may not lower US rates till July. There's about a 54% chance maybe in June. And Bank of Canada this morning said, pause again. Can't you just give us a break? Lower it by a quarter point? What's a quarter point? Let the economy decide whether, we create economic growth or not. Anyways, my point is that this has been postponed. So what's going to cause commodity prices to go back up? Unfortunately, the only thing left is weather. And I know you guys don't like to bank on weather because it's hard, but unfortunately we'll get into all of that, okay? So this has been postponed till the second half. I thought it was going to be a first half story. What I was trying to say is that if the Fed starts to lower rates, it prints money, creates more inflation again, and you want more inflation for commodity prices to go back up because the funds will lift that short position. I could have maybe got them to start lifting that short position because what did you learn from the highs in June of 22 when inflation was 9%? We learned that in a deflationary environment, if your crystal ball was saying we're going from 9% to 3%, you should have sold your commodities. Why? Because those funds do not like to own commodities in a deflationary environment. What happened to corn from 20, 21, 22? Corn went from 375 to 750. Why? Because of inflation. They were using it as a hedge against inflation. So next time, if there is a next time, there always is, you're back to 9%, and you got high prices, maybe we should be doing a little bit more risk management, okay? I want to thank my gold sponsor, Chalmers Fuels, this year. For you guys in this area, in the Wellington, Dufferin, Bruce, Grey, Huron, Perth, Waterloo, Peel, I love using they deal with Shell, and Shell has a forward booking program. It's called the maximum cap contract. I'll get into that with diesel fuel. We have a perfect track record. The last 5 years, we've booked diesel fuel at $1 a liter or cheaper 5 straight years in a row. And you can do it through the Shell dealer. No one else does that. You can go 1 to 2 years out. So every time crude goes to 65 or lower, book your diesel fuel. That's your buying opportunity, okay? So give them a call if you're in that area. They don't service, unfortunately, outside of that area. Okay, so commodities are very cheap. They're very cheap versus stocks in the last 50 years, and you can see from that chart that when you get to the, I don't have a pointer, when you get to the top end, you should be a seller. But right now, you're giving it away. If you want to sell when those funds are selling it, you're giving it away. I think commodities are undervalued, oversold. I don't think the fundamentals are dictating these low prices at this point. And you can see here that this chart's trying to say that you'd have to have a massive rally in commodities just to catch up with stocks. And I'm going to show you what the funds are doing. It's critical that you know what these funds are doing, because that money is flowing. It's not flowing into commodities, it's going elsewhere. And I talk about how, if we can't beat them, let's join them. And I'll talk a little bit more about that. Here's your commodity Bloomberg index, and you can see since the what did we learn from the Russian war? March 22. Well, at the time, everybody thought that people would starve to death, right, around the world. That didn't happen. And then, maybe the U.S. might win some business because of this war. That didn't really happen. And then Ukraine production came down. Yeah, that's still the problem, but that didn't matter. Why? Because other countries more than offset it. And along the way, the Russian wheat crop has gotten bigger. They're the largest producer, largest exporter. They're using that to finance that war, and they're undercutting everybody, including the United States. And the price of wheat went from $14 to $6. Well, that didn't work out like I thought. So that war in Ukraine is a bearish input. You need to stop that war to turn this market a little bullish. Red Sea, Suez Canal, the war with Israel and Hamas. What's that going to do? Well, it's similar to maybe locking down the world during COVID. It's going to create inflation again. Maybe not to the same degree, but when you have to go extra miles around Africa, it's going to add to those logistic costs. It's going to eventually add to your inflation. The retail consumer's going to feel it at some point. South America, it was really dry between September and December, but guess what? Funds don't care. There's a drought, but the crop is still large enough that when you add both Brazil and Argentina combined, it's still bigger than last year. So the market, funds haven't been worried about rationing prices with rationing demand with higher prices. The temperatures were off the charts, and I thought the crop would be smaller. We're about 48% harvested. We're going to be done at the end of March, and unless it gets below a 135, we started at 163 million metric tons. Unless it gets below 135, I don't think South America is going to matter on the soybean side. I think it's going to end up being the United States that may cause a problem. So we had that dry weather between September, December, and it started raining in January, and prices have continued to move lower. Argentina has been a mixed bag, but it was dry enough for 2-3 weeks that I think we took the top end off. But remember, if I put a 145 on Brazilian soybeans, you add 50 for Argentina, that's 195. That's still higher than last year at 185. That's the problem, okay? And of course, you got weak demand because China's not buying from the United States because of politics, because of other reasons, Taiwan, all that fun stuff, and you got a lower price. So these are the funds. And again, I don't have a pointer, but you can see there corn at the top. At one point, they were short close to 380 to 400,000. They've started to cover that short position. Did anybody have a March basis contract on corn? A lot of folks, there's 70% of the farmers in the United States still had corn from last year. It was the most undersold year in a long time. And a lot of them did a March basis contract. So here comes March hoping the price would go higher. And of course it did not. And so that was some hedge pressure as the March contract was expiring. And if you remember, March got as low as, I believe it was, $394.5. Okay? Getting old and forgetting these numbers. And since then, the market has bounced. Why? Because if they made a decision to either flatten or roll, that's gone. Okay? And now we got till the month of May if they roll to May, or the month of July. So you can see there from the chart, they've covered about 45,000 contracts. And again, they're record short corn. Why would you want to sell when they're record short? Do you remember last June when corn went to 636 and a quarter? How long were they? They were very long. They were long about 300, 350,000. But they were buying at the time because they were worried about that drought. We should have also been selling at that point. So that's when you need to sell, not when they're selling. That short position on soybeans at minus 160, that's almost a record short. The record short's about 165,000. So again, be patient here. I don't want you to be selling the beans here. One of the reasons why we haven't sold beans is because I've been selling beans for better than 20 bucks 4 straight years in a row. And I wanted a 5th year in a row. I didn't get my 5th year. The highest was maybe 1850, 1890. You know, there's an old adage, when you're good, you're lucky. I might get lucky again this year. But I'm going to have to wait till June. I'm going to need a weather scare in the United States for that to happen. So be patient. And if you look at cotton, the funds are long 94,000. Why? Because cotton had a bad year last year. It was too dry in the south. Demand started to show up from China. And all of a sudden, the funds are buying cotton. It's gone from 70 cents to about $100 a pound. And it's just one of those commodities that shows you that this thing can flip on you very quickly if you can give the funds a reason to do it. And some of the better commodities this year have been livestock. It's amazing how when you guys do well, livestock sucks. And when they're doing better, you guys are not doing so hot. You can't have your cake and eat it too, I guess. But lean hogs are doing really good this year, up about 11% so far this year. Cattle coming back because of that drought. And I don't know if you've noticed in Texas, the wildfires, it's very dry, folks. 1.5 million acres now. It's growing by the day. It's so dry that when the wind starts to blow, it sparks a fire. And it's not just in Texas, it's in Oklahoma, Nebraska, Minnesota. We've got a problem this year. We'll see what happens. So this is the updated chart, and you can see at the far end here, this was a record. This is combined grains and oilseeds, record short position across the board. It was lower than 2019, but the funds have started to cover that short position, and so that line has started to come up. So this is another chart that shows that even, see that red circle there? That was in the past years when the market funds were short corn, and even in other bear markets. And even in a bear market, and let's call it what it is, it's a bear market, they can cover that short position and still send prices higher, okay? So over the coming months, look for that to happen. So I talked earlier about the delay in that U.S. interest rate, lowering of U.S. interest rates, and this is the CME Fed watch. This is the 10-year U.S. yield. And if you notice here at the end of December 23, we got down to 3.8, and the market was looking for maybe 6 to 7 interest rate cuts. It's now back to maybe 1 thanks to US Fed Powell. He's not necessarily, he's told us late last year he was going to cut 3 times, quarter points, total 75 basis points. But since then, he's backed away from that. Why? Because the economy in the US is too strong, the labor market is too strong. So he's saying that if I lower rates, it's only going to cause the economy to get even stronger, and he doesn't want to create inflation again, okay? So that yield has gone back to that 4.1, 4.2. As that yield goes up, it drives the US dollar higher. If the US dollar goes up, the US export program remains weak because it makes the US less competitive around the world. This is the CME Fed Watch, 54% chance of an interest rate cut in June, quarter point, 54%. Like I said earlier, it may be delayed till July. So if you do get a lower interest rate, so this is more of a second half 2024 story, you can send that US dollar lower, but in the meantime, I would not be surprised if you get it back to retest the highs at 106, 107, which means Canadian dollar may fall. And you can see my downward sloping downtrend on the Canadian dollar. It's been range bound between 72 and 75.5 on the high end. We may retest that 72 in the coming months. Who has bushels in a bin? Who is tired of paying high interest costs and storage costs? You may want to do a basis contract. So if you get this thing to retest 72, and again, I don't know if that basis at plus 70 local elevator delivered is going to get any better, but if you get an extra 10 cents, 20 cents, in August of last year it was $1.20. That's when you should have did it. That's when we were doing it. It has since come down because we have a record, well, close to a record crop. I'll talk about that a little bit later. And so watch for that lower Canadian dollar to help you maybe manage some risk with that basis contract. So the question is, I have $1.20 over May, which is a good basis contract on corn. You may run out of time, and you may have to roll into July. I'll get into another slide later, but most highs usually happen in the last 23 years in June. They tend to happen 6-7 times out of 23 years. So you may have to wait till June for some highs, but you know, it buys you time. It buys you the month of March and April. We'll talk about some of the risks as we get into the next couple months, but for now, I would just be patient and wait. Crude oil, as I talked about earlier, you know, use Chalmers Fuel, that Shell program, to book your diesel fuel forward. Why do I try to manage every risk on your farm? Why am I trying to manage that input cost? Because I'm trying to lower your costs. You think corn is cheaper cost than last year? Maybe a little bit, but not much cheaper. Those inputs haven't come down like the price of corn. Who's growing corn again this year? You guys gonna switch to beans, go beans on beans? I'm telling you to stick to your plan, just rotate. It doesn't pay to go beans on beans because corn's too expensive. Remember, this price can change and flip on you very quickly. So, crude looks like it wants to go higher, trying to break above 80, but it's having a tough time. This war in Israel is creating that geopolitical risk premium. But you got weak demand from China, and you got too much production in the United States. OPEC continues to cut. You put it all together, and I still think seasonally you can go lower. Remember, $65 is probably your long-term channel support. When you get to $1 a liter in Ontario, book the diesel forward. Fill up your tanks, whatever the case may be, okay? Try to use that Shell program to help you lock in that input, because when I go and sell your corn at a higher price down the road, I'm having my cake and eat it too, right? I'm lowering my cost, and I'm increasing my dollars per bushel. So typically as we get into the summer, that price can rise because of higher demand. And if the economy in the US, the largest user of diesel fuel, gas, is doing well, then, you know, probably $100 on crude this summer, but then it'll come back down into the fall. This is fertilizer. Since 2019, I've been telling guys to book more fertilizer put up more on-farm fertilizer stores, especially for that 28%, because your suppliers change the way they're doing things with you. And over the years, like last year, we're storing 28 at 500-600. This year we got as low as 350, now back to 450, 500. And fertilizer actually bottomed around August, September of last year, and the prices have slowly been creeping up about 15%. And you say, Mo, why? U.S. natural gas prices have plummeted, corn has plummeted, and yet fertilizer is going up. Demand's strong, and we got issues with global supply, restrictions from both Russia and China. And so it's underpinning that higher demand. And last fall, the U.S. farmer did a lot of fall anhydrous, depleted the inventory. Now they're trying to replenish that inventory, and that takes time. So there's a lot of P&K going on. There's farmers planting beans in southern Minnesota and Iowa as we speak. Very, very early, but I have a funny feeling they're going to get frosted out, and you're going to have to replant those. So I don't think, people that said, I'll take a wait and see attitude for a lower input cost, that didn't pay. We were booking at the lows, and I think the price, depending on what happens, I think if you get a lower price, it'll be in 25, but you need a lot of pain this fall. In other words, you need $3 corn. You think corn's going $3 this fall? You hope not, but hope is not part of the plan. You got to be careful here because, prices have come down, but this could get a lot worse if you're not careful. I'll get into that here in a little bit. And so this is just another chart of that fertilizer price. But you can see the red line, still below the 5-year average. That fertilizer price is still lower than both 22 and 23. So, maybe it hasn't come down as much as you'd like it to, but it is lower. And this is natural gas. You can see it's plummeted. We had a really warm winter. It was actually the warmest winter in 132 years in the United States. That's not good going into the spring. So I talked about the funds. So if the funds are selling these commodities called corn, what are they buying? Stocks. Anybody invest outside of ag? You guys invest in stocks, mutual funds, maybe you got an RSP. It pays to remain bullish long-term in stocks, just like it is with ag land. In 100 years, you'd be a rich man. And we've gone to record highs because the market has been anticipating lower interest rates. Even though they're being disappointed because they're kicking the can down the road, earnings have been really strong, okay? This is a tech-heavy NASDAQ. Lots of tech stocks. They're chasing that too. What are they chasing in there? Have you guys heard of AI? What's AI stand for? Artificial intelligence. I remember 1995 was the start of the internet. And then we had that dot-com bubble in early 2000. And they're comparing that to this. They're comparing a lot of these tech stocks, AI, to that. I think it's wrong. It's just the beginning. This is bigger than the internet, the smartphone, and the computer combined. So think of this, okay? You got all these data centers. So when I click on my cell phone, I'm asking it to do something. It goes to a data center and then sends something back, and I get what I want. Those computers you're using, my laptop, they're all run by CPUs. If we all need to upgrade to AI, artificial intelligence, you got to run these new chips called GPUs. And there's one company called, well, I'll get to that here in a second. The funds are also chasing money market. Because the Fed is looking to lower that interest rate at some point, they're trying to capture that 5%, 5.25%, 5.5%. It's a little bit higher in the US than it is here. Do you remember the 80s when you could have captured 18%? Roll back a little bit. I'd like to go back and capture some of that in that GIC. Well, that's what they're doing now. So $8 trillion in 2 years, up 160% in money market. They could care less about corn, okay? And they're chasing Bitcoin. Anybody own Bitcoin? Should. I know you think it's a scam. I don't understand it. I don't like it. Full disclosure, I don't own it. I should. I wrote about it on January 21st because I said, you know what? The SEC is going to approve 11 ETF funds, exchange-traded funds, and they're going to legitimize Bitcoin. There's a bunch of other ones that don't trade on exchange, and I think those could be a scam because there's no transparency. And I said, you know what I learned? There's only 2 million Bitcoin available on the exchange to be traded. The rest of them are stuck in a vault somewhere as they mine it. I don't know why they mine. I don't know why they're mining. I don't know the problem they're solving. It just makes no sense to me. Bottom line is, it's all about supply and demand. When the SEC approved this for the masses, and the masses want it in their portfolios as a diversification strategy, increased demand with a small float, what do you get? Price rationing. And I knew it was going to go up, and it was around 41,000, and it's at yesterday's 69,000 all-time record highs, up 70% for the year. This thing was up 155% last year. And look at that. This is NVIDIA. This thing is so hot, it's not funny. I've never seen anything like it. It's a freak of nature. They can't get enough of this thing. This company 20 years ago, 25 years ago was worth about 20 million, now worth 2.1 trillion. It's just gone through the roof. If you had $10,000 invested 20 years ago, 25 years ago, you'd be worth 25.5 million. Unbelievable returns, like 17,700% within 10 years. See that chart? If you saw that on corn, what would I tell you to do? Sell it. Do you remember wheat at 14? Sell it. This is NVIDIA. It's parabolic. Sell it. Right? But they can't get enough. It's FOMO, fear of missing out. And like I said, if you play the long-term game, this thing will probably still do well, but short-term, man, it's just unbelievable, okay? And it was up 232% last year, up 72% this year. So now you know what the funds are chasing. No, I don't have the guts to short it. No, you know why? Because the stock has actually done better. It's gotten cheaper as it goes up. Why? Because it keeps beating earnings estimates. In other words, the analysts are too low going into the earnings call, and then they beat it, and they constantly do that. At some point, it's going to catch up with them, but I do own it. I've made money in it. I've been at it for a long time, so I've done well. I got lucky. If you listen to the CEO of NVIDIA, they're calling him God, genius, can't do anything wrong. He's very smart when it comes to AI. But anyway, so there's your drought from last year. 100, very, very dry. I was calling, remember if you were here last year, I was calling for that drought. We got it. The end of June, July. Well, end of June. Everybody thought we were in trouble. And then came the Canadian smoke. You think that Canadian smoke helped your yields? No? You don't know? I'm telling you right now, it did. I can't quantify it. It's a gut feeling. It's not only just coming from me, but I've talked to all the top agronomists in the United States and Canada. Ken Ferry, Missy Bauer, Fred Bilo, these guys have been at it for years, 60 plus years. And I called Fred Bilo and he goes, I'm good friends with him. He's about to retire. And I said, Fred, don't tell me you're scratching your heads on these yields. No, I'm scratching my head. I go, come on, you're a PhD or a plant physiologist and you don't know? Anyways, he said, I think lack of disease and the plant got all the nutrients early on, even though it was dry. Ken Ferry said he was tracking the ET rate, the evaporation of water through the corn plant, and at the time it was worse than 12. But that smoke that was coming in was protecting the crop. It was actually lowering that ET rate. It actually lowers it when it's hot and dry. And it was sending the sun rays down into the lower canopy, which normally doesn't happen, and it was adding to yield. He can't prove it to you. And then came the timely rains in July. So it was the timely smoke, timely rains, and you have better than expected yields. There's a guy named Kevin Kopp. He's a high yield producer, wins a lot of contests with the NCGA in the United States. He was on a podcast. He did 426 last year. Who did 426 last year? Here. This guy said, there's no way I could have done 426 because I didn't have the weather, but he thinks it was this Canadian smoke adding carbon sulfur to the soil that did it, okay? And do you know that wildfires can still burn in the winter underground? That's what was happening in Alberta. So we'll see what happens this year. I concluded that sometimes you're good and you're lucky. In other words, I'm referring to the good as genetics are very good, but they're not bulletproof. And the lucky is you got the timely smoke and timely rains. I don't know if you're gonna get that this year. So I think you guys got lucky last year. You're not gonna get so lucky in 24, 25. This is the USDA. January, February crop reports are bearish. USDA, as the funds have been selling these commodities, the USDA has found more bushels. They've added insult to injury, and there's been no reason for them to cover that position. A 2.172 billion bushel crop in corn, 15% stocks to use ratio always sends the price of corn lower. Now you still got to get through the planting and growing season in the summer before you get to the other end. But if this doesn't change, guys, you're going to $3 corn. Now imagine if I start cutting rates, US dollar starts falling, Canadian dollar starts going up, your basis goes to zero, and you're at $3 corn this fall. Are you gonna be able to make money? Well, you wish you never grow corn ever again. American. Yeah, so the question is, when do the American subsidies kick in? They have the insurance program. They just set the price. It's a lot lower than last year, and price of corn has to go lower for that to kick in. But there's some other risks as you get into 25 that I got to talk to you about that could cause major headaches for you guys. But let me get to that. So be careful here. Okay. What did I say earlier? The highs are usually in June. What are you going to do in June? Are you going to be like a deer stuck in headlights like last June, where you told me, Mo, it's too dry, I don't know what I'm going to have, so I'm going to let it go? That didn't work so well, okay? You have to do some risk management as you get into the month of June or July. So there's a report coming out on Friday. Guess what? Nothing's going to change. Production in South America is going to come slightly down, but the USDA is very slow to adjust, so don't depend on them to change the theme. You're down to 152, but most private ads are below 150, and then on corn it's 121. Most guys are in that 110, 112, so USDA still has a long ways to go. This is for Friday. 2.16, slightly lower than last month. Beans, 320 versus 315, and then wheat about the same. So really it's a non-event. You gotta wait till the end of the month when you get the March Planting Intentions Report and you get the quarterly grain stocks report. So if you think the USDA is lying, that quarterly grain stocks report may give you some insight as to whether they overestimated or whether maybe demand was better than they expected. Here's the problem with South America. Again, if I add 150 plus, or let's even say 145 plus 50 for Argentina, that's 195. And you know, that third last column is 185 from last year. Still too high. I need that number lower. With corn, in the second spring corn crop, it's getting dry. Dry risk for March, April. So there's where you might get the funds to start pulling some more trigger on that short covering. And if you get a dry spell for that second spring of corn crop and you lower that production, all of a sudden China might start to buy from the US again, and that's going to trigger a higher price. So look for that over the coming months. Here's your problem. China, they're not buying corn from the US. You can see how they weren't buying prior to 2021, then they start buying big amounts, and now they've stopped again. They're basically wanting to buy from South America. The big buyer is Mexico. If we didn't have Mexico, the U.S. corn export program would be suffering badly. Here's your global ending stocks numbers. So you got a bigger U.S. stocks to use ratio, you got a bigger global stocks to use ratio, you got lower prices. Yeah, the question is Mexico buying GMO corn? Yes. I know there's been an issue there with, but I think it's mostly for, they're buying the GMO for consumer consumption, but they don't want to buy it for livestock. Okay, so that's been the big issue. But yeah, they're 47% of total exports go to Mexico. Soybean exports are also lower. They're down 20% versus last year. USDA is down 13.7. And so again, China's buying from South America. So that remains a headwind for soybeans. Crush demand, on the other hand, is record strong and offsetting. So we need more of this, okay? And then the problem is that the soybean price, US is uncompetitive. US dollar's too high. Soybean price in Brazil is $1.50 cheaper. So how do we compete with that? World stocks-to-use ratio also higher. So the USDA has been increasing that tighter soybean stocks-to-use ratio, and they're also increasing the global number. These two numbers need to change. Wheat exports up 6%. China was buying at the end of last year, and then they stopped. So that's been a headwind. USDA targets minus 4.5, so it's helping a little bit, but it's not enough. Here's a look into 24-25. So the USDA is saying that we're going to plant 91 million acres of corn. That's down about 3 million acres from last year. Ag Resource is doing a survey right now, and they provide me with some insight. And in their early survey, they're saying, you know, everybody thinks we're going to switch some corn acres to bean acres this year. Our survey's not showing that. Why? Because the farmer's not in pain yet. Yeah, the prices come down, but you guys did well the last few years. Now, if corn goes to $3 and you're in pain, then he thinks that might happen next year, but don't expect that to happen this year. So in the March Planting Intentions Report on March 28th, I think the corn acres may only come down a couple, which is bearish corn, but you're not going to add as many to beans. Now in the fringe states, cotton may be adding some acres because of higher prices. There's been talk about alfalfa, hay, sorghum feed for cattle because of the wildfires, maybe canola, sunflower for oil for those biodiesel plants in the north. But again, I don't know if the farmer's in enough pain to do those switches. So if you look at my highlighted red column, let's assume it's only 92 or 93 million. With a yield of 175, you get ending stocks below 2. You need a sub 170 for this thing to start to go back up. With as dry as it is, do you think we can produce a 181? USDA said 181. They've never produced that, by the way. So a 175 or something sub that, I think is doable. If we can get this below that 2 billion, we can get back to $5 corn. You know, plus a dollar basis, $6 not bad, 1,200 bucks an acre, 200 bushels. We could survive. We can live on that, right? But if it is a 183 or a 181 yield, that ending stocks number is going to grow. And if that number grows, you're going to see $3 corn this fall. That's your risk. What are you going to do in June? You're going to store and ignore again? I know I've been talking 89-year drought cycle. If you guys have been here for a long time, this is the 5th year. I'm going to get it right sooner rather than later. It's either this year, next year, or 26. I don't know if Mother Nature's going to rhyme. She's going to repeat, and that's going to rhyme. But the market is setting up for this year based on what I've seen. This is worse than 12. The United States Midwest is worse than 12 right now. But she can change. She can bring a lot of moisture in the next coming months. So you got to keep an eye on that. We're going to add about 4 million to beans. But what about if it's something less than that? Maybe it's 85.5. You drop the yield to 49, and we get a tighter market. Okay, so the beans are still tight enough that if we don't add enough acres at the end of the month, maybe we're not doing that soybean on soybean. A lot of this acres really depends on the wheat harvest. and the second crop of soybeans that the United States can plant. If it's a very dry summer, they won't do it. If it's plenty of moisture, then they will do it. So I'm still hoping that we could have a run in the beans. I'm still concerned about the corn because we have too much supply, okay? Here's March corn. So you can see on the chart at the very end there that you're getting that bounce, that short covering rally, okay? See that red line? It's around 502. That to me is your fair value. That's your 200-day moving average. Remember in the video where it's parabolic? Do you know where the 200-day moving average on the video is? It's about 460. It should come back to correct that 460, you know, so it becomes less overvalued. I'm telling you right now, corn's undervalued. And at some point, it'll migrate back to that meaner average. Don't make this any more complicated than it is. That red line is your mean and your average. At some point in the future, we always gravitate back to that 200. When the funds are over that red line like they were last June, what do? You sell them. Maybe you don't sell 100, but you got to sell something. At least you could say you sold some. Okay? So this June, if you see the funds covering and it's above that 200-day, you can go to Farms.com, click on the market site, click on corn, and it'll bring up, you can bring up that 200-day moving average for free, okay? This is, again, how often does that December corn futures price peak? Usually peaks in the last 23 years in the month of June. This is meal. For those livestock producers, we called the bottom last Thursday. We rang the bell for a bottom. There's your good news story. There's some hope. I tend to do that. I'll stick my neck out. We'll find out in 4 months if I was right or wrong. I guarantee you this is not going to go any lower. Maybe this fall, but I think from here on in, we will rise. But if you're a livestock producer, cheaper meal. So chicken, hog producer, now's the time to buy it. From here on in, I think the funds are going to get nervous because of this weather. And they'll start to cover, okay? So we're hitting that long-term channel support. We've got soy oil, a downward sloping. But why is soy oil falling if we got all this biodiesel coming online in the next couple of years? Because it's still a couple of years out. There's actually a couple of plants that closed down. So it's not all rosy. And so it's also hitting a long-term channel support, but that's also weighed on soybean prices. So we need a recovery there to help the soybeans. A similar year to this year in Brazil was 15-16. By the end of February, they had a production issue because of drought, and the funds started to buy. And between February and June, price of soybeans rallied $4 a bushel. Is that going to happen this year? It could. I'm just trying to compare to other analog years. This is canola. We don't grow a lot of canola in Ontario, but again, I think we've already hit the low end of the bear move, and it's over, and I think we'll start to recover from there. Western Canada's in trouble. 94% of Western Canada ag land is in a drought. It's worse than 2021. So we'll see. And 21 was bad. Wheat. We talked about wheat. You know, we need a problem in Russia. We need that war in Ukraine to stop. That's what you need, wheat. Because the wheat in the United States right now, the conditions are actually quite good compared to last year. It was very, very droughty last year. It's not so bad yet. And then this is cotton. So this is one of those commodities the funds are buying. And they've been going long, and you can see that parabolic move again. This is one of those parabolic moves. So if you're a cotton producer, maybe you need to start doing some hedging, some selling. Hogs, any hogs in the room, hog producers? It's an early year for you, it's a good year. July's up to 104. Looks like it wants to go higher. You got good U.S. demand, good global, good U.S. economy, and good exports worldwide. So it could be an early year. In early years, futures tend to peak in April, May, instead of June, July, and August. So best guess 120 a carcass. You need to cut out to get to 120. If you see it there, you got to do some management. Live cattle, feeder cattle, again, this drought that I talk about, the wildfires right now, this is a problem for cattle. You're going to see new record highs this year, next year, 26. You may not rebuild this herd till 2028. It's a bull market in cattle, period. Same thing with the feeders. Basis, we talked about that. So again, the basis has come off. So we did a tour last year. We projected a 53.5 on the beans. Agricor currently is at 53.3, but they're not done collecting all the reports. It's a late year. Usually they're done by January. We're projecting a 203 on the corn. They're coming at 198, but they're still not done collecting all the reports. Those big supply crops are weighing on basis, but weak demand. Remember, if the United States is competing with corn from South America, so is Ontario. Okay? And so that demand, that export market in Ontario is weak. You can see the bean basis has come off. Maybe the best basis was around 450 over. And then we got the wheat base. The wheat basis actually has come back. We haven't planted as many acres as the previous year. And so it's adding some upward pressure on wheat, despite, you got a lower Canadian dollar as well, so that's helping as well. So the 115, 120 is not bad for either old or new crop. You know, sometimes you can get into that plus 220, 240, but you got to wait till that September period to do that. La Nina is returning, expected to return by May of this year. That's a very dry, hot weather pattern. By the way, to get my 89-year drought cycle, you need a La Nina. Now the weather guys are talking super La Nina. So keep your powder dry. We'll see what happens in the next few days. The 30-day La Nina, you got to get into a positive number to see a La Nina. The 30-90-day, not quite there, but time flies. So we'll see very quickly how quickly La Nina returns. And here's your big risk in 2025. Trump is back. And he's not good news for ag. Maybe. So if you go back, we got to go back a bit. 2016, remember what happened? He got voted in. Stock market jumps 1,000 points. Everybody's cheering him on. Love him. It's going to be good. Starts a trade war with China. Exports fall off the cliff. Prices fall off the cliff. The first year of his presidency, he gives farmers a subsidy of $28 billion. By year 3, it was $57 billion. No wonder the farmers love him. What'd you get? Nothing. So you get to sit here and watch everything go down and feel the pain. He's talking 10% tariffs with all trading partners, plus 60% tariffs with China. Oh my Lord. I'm not looking forward to the next 4 years. I'm not trying to endorse any president here. I'm not trying to be political with you. Good, better, and different. But this is a risk. How are you going to manage this? I'm going to go back to June again. What are you going to do in June? You got to manage some risk, because otherwise, we don't fix that big supply in corn. Corn's going back to 3, and then here comes Trump starting a trade war with China, which China already doesn't like it. Well, it doesn't like the U.S. Now he's going to make it worse. But remember, there's no guarantees with Trump. This is the problem. Remember 2018, he started that phase 1 trade deal with China. Exports took off. Prices came back. Ooh, this is good. And then he didn't get reelected, lost the election. I'm not going to get into that. And he was going to work on phase 2. And they wanted to work on that intellectual property theft, IP theft, that China's famous for doing. They like to cheat, steal, and lie. Reverse engineer everything. That's why they got export restrictions on those NVIDIA GPU AI chips, because they're worried that China's going to do better than the United States. Anyways, I'm hoping he goes back to phase 1. He had a deal with Z and said, hey, bro, because they had a bromance. He was having a bromance with Z, and he was having a bromance with Putin. I mean, the guy adores Putin. I don't know why. I hope he can get the Putin to stop the war, both in Israel and Ukraine, and hopefully we can do something with China. And I'm hoping that he goes to Z and says, hey, we had a deal. Can we go back to that deal? And you haven't met my commitment. And what about phase 2? Let's work on that. And he's probably going to have to work on AI and all these chips that they want. Trust me, China's still getting those NVIDIA chips. You go into the black market, I guarantee it's just coming from a different country. You know, so anyways, so that is your risk as you go into 25. So it's been a bad year because of better than expected yields. Whether you like it or not, that is what it is. It set funds down, selling these commodities because of a deflationary environment. Instead of chasing commodities, they're chasing money markets, Bitcoin, and AI. So maybe you need to have some Bitcoin and AI in your portfolio instead of corn. No, I'm just kidding. I've gone to other presentations. I said, go sell your chicks and hogs and ag land and corn and just put it into AI. Anyways, no, I mean, talk to your own financial advisor. That's not financial advice today to go to. I hope I provided you with some insight. This is the 2024 tour. I want to thank all the current hosts and sponsors. If you fill this out, we'd love for you to participate. It's absolutely free. You can be on the 2-week tour. You can join one of our final events to the tour, both in Chesterville and for here, it's Woodstock. Got a lot of great information, free food, networking, all that fun stuff. And then there's our March Planning Intentions Report. We'll share the information with you. But if you fill this out, we're trying to get some insight as to what the acres will be in 2024. If you come and visit me afterwards and use the word Chalmers, because I want to thank my gold sponsor, Chalmers Fuels, I want to help you guys out. I know you had a bad year and had too much corn in the bin and all that fun stuff and prices are lower. But if you want to sign up to our program, you're a new customer, I'll give you a 50% discount off of our $800 retail program for $400. Come and see me, and let's go make some money together. Remember, June's going to come around the corner, and you're going to have to make some tough decisions. Thank you very much. Does anybody have any questions?